It's been quite the journey, so let's end it with a bang. Hey guys, it's Newfire, and here goes the last video of this series where we're going to be talking about Visa. For those who are just tuning into the series, funny that you come to the last video and you should probably watch the others first. This is SSSMI, Simplified Strategies for Stock Market Investing, where I talk about 25 different companies that beginner investors can choose from as potential investments. So without further ado, let's start the last video of the series. So for the past couple of videos, we've been covering several companies in the banking sector, like Bank of America, Chase, and Citibank. They're all pretty much interchangeable in the services they offer, but the thing we're going to be focusing on today is credit cards. So all of these issue credit cards, we know that already. But if you own a credit card yourself, you'll likely see Visa printed on the bottom right corner. Why is that? Well, yes, it's the bank's money you're using and the bank's cards you're using. But Visa is the network that all these banks use to process and make the payments. Fun fact, Visa was actually formed by Bank of America. So, let's say you're at a grocery store and you want to buy a bag of chips. You swipe your card on the machine and it reads your info and sends it to the bank. Visa receives it from the bank and checks the details of the transaction to make sure it's legitimate. Then it sends the information back to your bank, and the bank processes that info and chooses whether to approve or deny the transaction. Usually your transaction would be approved, unless Visa or the bank detects sign of fraud or you've exceeded your limit. Then the approval goes through Visa once more to the grocery store, and you've successfully made a purchase. It sounds like a long process, but it happens in less than a couple seconds. All these large banks I mentioned earlier use the Visa network, as well as some more thousands of banks. So now that we know what exactly Visa is, let's take a look at the stock. In 2008, shares of Visa officially went public for $44 per share. Now, each stock trades at $227. To put that growth into perspective, if you'd invested $1,000 at its IPO price, your stocks would be worth $22,700 today. That's not bad growth at all, since we're looking for slow and steady growth from safe investments. Today, Visa is just as vital as a bank to everyday life. Because everyday small and large payments are processed on credit cards, and Visa's that network that these cards run on, it's going to be here for a long time. Visa's growth pretty much satisfies all the components we're looking for in a potential stock, and seeing their history, they look like they'll only continue to steadily grow from here. But it's worth noting that the stock is expensive at a price of just under $230. If you want a cheaper stock that has more room to grow, Visa might not be the right investment for now. And that's it! With that, we've concluded the last video in this series. It was a good run, and I hope you all learned something. The world of investing can be scary when you're just stepping into it. There's thousands of companies you can invest in, and having too many choices makes it difficult to choose the right one for you. That's why through this series, I condensed it down to 25 companies, all that you've definitely heard of and even used before. From here, after knowing the basics about each company, you can now decide where you want to put your hard-earned money in. Investing now, especially when you're young, is going to be incredibly beneficial for you in the future, because money grows more money. And that's it. All you have to do is choose a company, invest in it, and let it sit for 25 years or more. And the beauty of it is, if you played your cards right, you'll end up with double, triple, or quadruple your initial investment. Now, I bid adieu to SSSMI. And when you're done with the series too, stay tuned for my future videos. Thanks for watching, and this is Newfire signing out.